The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a wonderful February 21st at the headquarters of Technical Trading Investing, TFNN.com, with your lovable but humble host, David White, for the Power Trading Hour. And, boy, I tell you what, you just couldn't ask for a better day in Clearwater, Florida. It is absolutely brilliant. Had to turn the air conditioning back on today, though. Got just a little bit warm. So all you people in the knee-deep in snow up there, remember that you can leave at any time, come down here and pay our exorbitant taxes on our hotels, so I don't have to pay state sales tax or state income tax either. So it'll be, yeah. So, just think of me for a while, and just that. We've got a market that is off. We're going to get into that in a minute. Not a lot changing here in the last couple hours. We do have significant volume, and we'll get into that. 2.8 billion shares. Normally we come in at somewhere between 2 and 2.4 when we start the show, so certainly 400 or 500 extra million by this time. So it will be that. But on this day in 1972, the 15th million Volkswagen Beetle came off the assembly line, breaking the world record at that time for held by 4 decades by the Ford Model T car. Of course, if you're watching on Tiger TV, you know, the VW always makes me think of one thing, and that is the National Lampoon. They put out a couple of great posters in the magazine and I love the magazine because it was totally politically incorrect and probably couldn't survive today. I don't think most magazines do, but it had great. The letters to the editor were the best. But they had a few iconic things. One was the cover where they had the gun to the head of a dog, and it said, "If you don't buy this magazine, we're going to kill this dog." One of the other ones that they had that was the greatest of all time was a pull-out poster. And it was a mocked-up version of the actual ad for a Volkswagen, and it said, if Ted, and I don't know if you remember this, but they used to put Volkswagens in pools and out in the ocean, and there'd just be a picture of the Volkswagens. You know, it was so built so well it was airtight. Well, they'd float the Volkswagen in the pool, but this picture was of it floating in the ocean. And all they did was change the tagline for the ad, and it said, if Ted Kennedy drove a Volkswagen, he'd be president today. But somewhere in comedy there is a probably one of the best jokes. There should be an award for it, and I have a feeling that that magazine in that brief period between 1971 1980, probably the most brilliant writing ever for comedy, ended up one of the main writers in that started talking about his days at the frat house and ended up being National Lampoon's Animal House. So a lot of neat stuff happened out of that. It's degraded into really bad B movies now as the home for it. But there's always better days. And, of course, you can find old copies of it on the Internet these days. But still, some of the probably most brilliant writing, especially since they didn't have to answer to anybody. It's just a bunch of college dropout hobos that wrote excellently, and a lot of them became very important and big in writing a lot of big movies out there. But 15 million Volkswagen Beetles, that was 1972. 15 million, probably not all that much anymore, but it held for 4 decades, so still pretty big. Other things out in the news, Tesla is getting slammed today, and what of us get into that? But it is what it is. Tesla was getting beat up and mauled in the market because basically, if I can actually type correctly, TSLA. Basically, they came out and said that they are going to have kind of bigger losses than they thought. They'd ramped up to 20,000 vehicles a year. Of course, they've been fighting about the whole thing with the New York Times over the last week. They've gotten a significant amount of press. Just when it finally comes out to it, you're going to find out that they're going to have problems selling these if fuel prices don't stay over about $4 a gallon. Even then, it's a tough sell selling a $75,000 car, a $2,000 Charger, and the ability to go less than 230 miles. Of course, the big problem that they had with the New York Times article is just how much energy, less energy you get out of a battery when they are cold. In fact, we're going to be talking a lot about battery technology tomorrow night in the Tech Insider Hour with Tom O'Brien. Probably the theme of the last couple of weeks. Boeing basically has come out with a better plan on how to build their batteries. We'll talk about that kind of technology, what's going on in batteries. But it just seems like everybody had a lot of promises about battery technology. In fact, Tesla was saying that the range on this car before it came out was going to be close to 400 miles, 380 miles. 230 is a long way from 380, and the promises fell really incredibly short on this. But they're going to continue to actually lose more money the more cars that they build now, and it's pretty tough to follow up on that. Down on heavy volume, I was short for a while on Tesla a couple months ago, and it went sideways for a while, and I went ahead and closed it without a real win or a loss on the thing. But what I have noticed is that a lot of people and at IPO were trying to keep this thing up so they could get some action on it. And I think it was a lot of distribution. What else do we have going on out here? Walmart, of course, Walmart is also down today. WMT, isn't it? And to get a current quote for it right here, $70.56. It was down as low $69.72. High was $71.47. Basically, when you go through what they were doing, they were down to what, 68 and change last night. Probably a lot better. Pre-market, they were down to. What you find out is that probably the biggest problem Walmart has right now is the Sam's Clubs. They are not growing, and business is actually slowing. A lot of people are not buying in the bulk that they once did, and it is starting and continuing to hurt Walmart. A lot of people jump back in this thing today, but maybe more of a safety play than anything else. We've got, of course, a lot of bad weather running across the country. I'm kind of surprised we're seeing a little bit more volume out here today, but we could see more problems, especially in the northeastern sector. So just keep that on the back burner there in case we get another snowstorm that closes down New York and the trading community. A bunch of analysts, in fact, in the last 2 days, are calling for Google to go to $1,000. Almost always, this is the rallying cry to sell it. When it's almost a curse to say that, sometimes it does prove well, but almost all the calls for Apple at $1,000 came at plus 680 on Apple. And of course, probably the most famous one was Amazon that came back about 80% when it was called to go to 1,000. It eventually, of course, caught back up with itself, but took about 10 years to get to that $1,000 levels after the call for $1,000 and I thought it was an 80% retrace. But I'll have to go back and look at the chart longer on. Anyway, a lot of positive things in Google. Probably a good time to take your money. It's up just a tiny bit. But on a market that's not, really moving, we'll have to take a look at it. I wanted to get an update here, just on, so I've got it current. S&P right now printing off 1498 and small change. And again, that volume, 2.9 billion shares. So volume is increasing. Somewhere around lunch, it did start to taper off. It is now starting to pick up in a fury. I suspect right now that we are set for 4.5 billion shares or more by the close today. And going into a weekend with a lot of people that may have been margined out long, just thought this market could not come back at all, probably going to be a little bit surprised. Hopefully we are in Q. Are we? We are, because we had a few calls last Friday, and we said that they were a little piggy. Well, I hope they sold their positions. A couple of them was LinkedIn. You know, not horrible pullbacks in these stocks, but I just wanted to go back to them. One was LinkedIn, LKND, and see how these are doing. LNKD, right? And we're getting a bit of a pullback on it. I haven't got a huge sales signal on it yet, but this thing's probably going to hold up here for a little while. But look for this thing to close below either a 9-day moving average or a 3x3 displaced moving average, maybe a little higher. Come back above that, close back below that line one more time. We've been talking about this week that double repo pattern. But look for this thing. It is probably one of the strongest stocks out here in the market, but this thing's probably going to come back into the 135 range, and that would be your time, if the market looks good, to think about going back and picking it up. But pretty tough to be thinking about that right now. We're going to get into a lot more stocks here before in the next segment here. But at the same time, you can always give me a call, 877-927-6648, 877-927-6648, and talk about our stocks. So maybe get a little bit early into it. We are in a market that is pulling back. I did say that we sold our position in gold puts yesterday. At least the GLD, which we had the puts on, is up just a hair under 1%, or 0.8. Let's talk about 0.8%. I suspect we're going to see a little bit of movement that's at least sideways in gold. And of course, when you're holding options and they pay off, normally the right thing to do on options is actually take your money. We had kind of an inside day so far on GLD from yesterday. One thing I've always noticed in gold and commodities is that normally huge volume does do one thing, and that is it makes it either go sideways or you get a bounce after that huge volume day. And we certainly have the highest volume, you'd have to go back to February 28th of 2012 to have higher volume. And normally, you just want to let the dust settle, but this thing could go out, consolidate for a while. I think you're on the right side. You're just going to have to give it a lot of time on gold, but maybe get a nice little pop back in this thing. We'll be ready to go.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
We keep sliding a little bit lower off 14 points on the S&P cash, 3 billion shares. The volume is picking up, and it is going strong, especially for 24 minutes after the hour. Normally you don't see a pickup in volume until 3:30, something in the day, but we are seeing action already. A lot of people starting to move out of these stocks. One of the other things I'll bring up about gold, because we're looking at the ETF, early on, one of the first guests Tom had on about gold was a man named Jim Sinclair, and he'd been kind of the big heavyweight in the 87 or 80s move in gold. And he said one thing that he said was that I always found fairly interesting. He said normally during all that period, when the market went sideways, you had big moves in gold. When the market started moving, a lot of people would forget gold and move out. So he kind of always said that he thought it was somewhat a movement of last resort, and that is when of course, when the equity market was not moving, the commodity market was. And he said, always when you see a market starting to go sideways, like we had for a couple of weeks, look for big moves in gold. He says then normally the equities will follow, and the movement in gold will at least moderate somewhat. It won't be the front page thing we got last night. One of the other things was after being bullish on gold on most of the financial entertainment shows and networks out there. Everybody, before I came to the show yesterday, was basically saying that gold was going down after they've been locked to being gold going up. Once everybody turns rather pessimistic, also another good time to basically close your short positions. Jesse Livermore has a great saying on it. Maybe I'll be able to find it during the break, but it's something to the effect when everybody becomes pessimistic, good time to think about covering your shorts. We did that in the gold trade yesterday in the puts, and where we were in whatever it was, like 250 for the puts and out somewhere in the high sevens. Good trade. Anyway, when we look back at GLD, even just looking at some of the movements out here, we want to look at and see where this thing could bounce to. And it's not too tough to think that this thing, at least on the GLD, is going to come back into the high 156s to 157 range. And that would just be a normal bounce out of here and maybe start setting up some ABC downs. But I could see it pulling back in there. There are some confluence levels that start, let me get in here and zoom in here so you can see them. They are kind of stacked up on each other, but you could probably start looking at it. Probably what I'm looking at is this gap down that happened just above, what are we going to call it, 158 and change, down to 156 and change. Actually, there was an existing gap. It jumped over that gap on the 15th. So you've got basically two gaps setting up there. A lot of times these markets will go ahead and bounce. They'll get back up into that previous one. I do think that we could see over the next 6 months gold in the 1250 range. Not near as pessimistic as Tom. He's got 1100 target. But I think support probably lies somewhere around 1400 in gold. And there's probably $150 of just sticking it to everybody that is long gold, that just typically that's in the gold market, because the exits are so narrow. So are the entrances. One big stock takes up all the gold miners in actual market cap. So a very small market. Everybody floods in and everybody floods out. It's just like the inlet to the Bay of Tampa here, where everybody is always, you get to that bay inlet and the water can really be running even though the tide not that strong. But, you can get 6-knot currents coming in and out of an inlet of a big bay like that, just because all that water has to rush through that one little outlet. And you always get a pretty good tide coming in and tide going out, adding to basically the same thing we're looking at here in gold. Just not big exits in or out. Again, you can give me a call, 877-927-6648, 877-927-6648. We'll be glad to take your call. We'll start looking at some other ones. We looked at Walmart. Did seem to recover a little bit here today. But this thing has got monstrous resistance right at pretty much where it is. Again, these confluence levels are really starting to pay off for finding where these stocks are at. And not a bad deal out here, but we're going to have to look and see. But, this thing basically spiked right once again back into this confluence area. It's going to be, everything is 760, 7...
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
We're going to look at some of the movers out here today. Canadian Solar, CSIQ. Of course, these solar stocks had a huge move off the bottom in March of 2009. This is one of the ones I bought that was huge. If you want to go back and check that out, I was busy in March of 2009 picking up stocks that were testing their bottoms on 10% lighter volume. A lot of these very inexpensive stocks. I think Canadian Solar at that time was like $3 and it went to 14 before I sold it. But a lot of times make pretty good movements out here. What we are seeing is a big movement, and a lot of these solar stocks are probably going to pull back on what I think is long-term weakness in the energy sector. We've got crude off, printing around 93 right now, off a little bit more than $2. But I think crude is probably moving its way back to the $65 level over time. We've had kind of a little bounce here, a little market gas, but a huge amount of supply is coming online. Everybody's saying, well, there's just not enough oil. There's not enough oil. I suspect we're going to be awash in oil by the second half of this year. It'll be interesting. But today we see this thing pulling back down. One of the interesting things is that volume has picked up enough and probably going to break out the previous movement out here. But we were back into this candle, which is support. on the 9th of January that had 2.5 million shares. So probably the best part of the pullback in this is already over. GNRC, one of the things that we had today is a lot of stocks that are down on secondary offerings. Generac is one of these. And what are we talking about? We're talking about adding additional stock and diluting shares in the company. Generac, of course, the company that took off like a rocket during the northeastern storms. Everybody needed a standby power supply, and Generac, of course, builds those. The thing just took off like a rocket from $20 to almost $40. It's been going sideways for a while. It did break higher on much lighter volume. We brought this up on the show. When you look at this, the November 5th high, let's see if we get out here, the November 5th high at 5.2 million shares at 39.18, went over it with 1.6 million. Pretty good indication. We've got a call, and it's Ken from Massachusetts. How you doing today, Ken?
Good. How are you, David?
Fantastic.
I was just wondering about the 3Qs. I have a option that expires next Friday, and I was just wondering if you thought it was going to go lower, or if it's someplace where I should sell today.
What options do you have?
I have the 66 put for March 1st.
I guess probably the biggest question is going to be is how much the implied volatility on these picks up. We had a nice move today. I probably don't have time to go through the QQQ options chain to see how much they moved, but hang on just a second. I want to look at, because I have here, just want to get a current quote on the VIX. Where are we at here? So we're up 10% on the VIX today. You can almost make money if the VIX just stay, if the QQQs just stay in here, and we keep seeing this implied volatility go to what I think is going to be about 25. You don't need a whole lot of movement in that to actually continue making money, is what I'm trying to say. Because as long as we keep seeing stocks fall out of bed and everything, the IV is going to continue to pick up. So it is, to me, especially if we close below 1,500 today, I think you're probably looking at 1,470 before you get any appreciable bounce.
Okay.
So to me, at least on the S&P cash, that's what I'm looking at. The Qs, unfortunately, it's got so much to do with Apple skewing it and a couple others skewing it that I'm probably not going to give you a good target on QQQs. That's still a huge problem. But I think you could almost look at the S&Ps as a better target. And I think somewhere around that 1470s is probably going to set the low for the QQQs and the S&P cash. So that's probably going to be somewhere around $65.
All right, thanks.
You bet.
I appreciate it.
And again, you can call in 877-927-6648. Anyway, we were looking at the QQQs. When you look at that, you do have a high volume up on that early January gap up. It came up, and so we're going to have to kind of beat through and chew through this to the downside. Volume is good. Again, we're going to have to see how this market closes because this is going to be it. But we're into that gap up day, and we're going to, we could easily come back and fill this gap at 65 in the QQQs and that the equivalent gap in the S&Ps and Dow fairly easily. Again, one of the things you really need to look at is just when we look at this, how many doji days do we have since that gap up? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. When I was talking about the marketplace and being worried about it, I was talking about it on Tuesday. I thought this market could crash. A lot of the reasons are those just how many dojis you get out there. When it opens up the same price as it closes, normally a very good sign of some kind of, hang on a second here, sign of accumulation or distribution. My guess was the distribution mostly because we saw the McClellan Summation Index turn over. And when you looked at the daily advanced decline numbers, you don't get a real sense for how strong it came down, but you do get to see more and more stocks closing lower than higher. And normally the long-term bet is always on the direction of the summation index. I wish I could follow it better. It's one that takes a long time to prove itself to a trader, but if you can stay on the right side of that, it's normally a fairly good thing to do. But you know, we are coming into what should be fairly decent support areas, and it's going to take a while to chew through those. That's why I've been telling everybody, if you were buying options, you probably want to be out at least a couple of months. It's probably too late to be buying them now. But you needed enough time for this thing to break through and chew through those options. Anyway, Michael Kors, another one of these stocks down on heavy volume today. Another one doing a secondary offering. Another good indication that at least people on the street have gone to these companies and said, if you're going to get money, you better get it now, and I mean right now, because we had 4 overnight. Michael Kors, K-O-R-S. Someone was talking to me about shorting this thing, and boy, I probably should have spent a little bit more time looking at it. I just wanted a little bit more time. It is a rather new IPO, but good setup out here. Down on heavy volume, it is filling its gap. It's going to fill it with heavier volume out here. So that we're going to open up going back into this trading range, and anything probably below, a close below, I'm going to call it 58.5. Is probably going to be a good indication that this thing is probably going to head on back down to the previous gap in the 48 area. And seeing weakness in a lot of retailers today. Go ahead and get rid of that one. Patrick Industry, not real familiar with this company, so let's get the profile going on it. Another one down on huge volume today. Patrick, Component Products and distributes building products and materials for recreational vehicles and manufactured housing. So they must make aluminum siding for RVs and mobile homes, apparently. Graphics and some other stuff. So when we look at this one, take a little bit bigger look and see where this thing is going to. I'm going to say right back down to this gap in the $10 range. We've got Shivan from Boston. How you doing today?
Good. How are you, David?
Did I pronounce your name correctly?
Yes, you did.
Okay. And we're looking at Petrobras.
Yes.
So what's your question on this thing?
It seems like it almost bottoming out, but I'm not always you say that bottoming out means does not necessarily it's bottom out. For it to fall.
Well, you've got higher volume yesterday than you had on the last major low, which was on June 28th out here. So it had 10 million shares. It broke through there, it gapped through there, and it gapped through there on heavy volume of 68 million shares. This thing has broken out its bottom. And this is one of the reasons why I think we're going to see crude in the $65 range maybe in the next year. That we could, you know, there is going to be a lot more. Petrobras is the Brazilian crude and I guess the overall energy company out here. And they've spent a lot of money to drill wells offshore. A lot of those are actually coming online now, but they were pretty much looking at $90 to $100 crude to make those things pay off. They're probably going to have to pump them just to keep paying the lighting bills for their company. But the ability for them to make lots of money is probably going to go away. They probably need about $87, $85 a barrel to really keep them going with the kind of crude they have down there. But this thing's broken its low. It's done it with enormous volume, and probably the best you can hope for is this thing going sideways. And it hasn't. It's continued to move down. I'm trying to see if there's anything. I went back 3 years, see if there's anything out here that even gives me an idea. Well, you've got a low out here at $14.73 from November 20th of 2008, which is probably the target and probably temporary support. Have you looked that far back in the chart?
Yes, I have.
Is that what you're looking at?
Yes.
Okay. You know, the one thing I'm going to say is, when do you think about buying this thing? It's when stocks come back this far, in this case 5 years, 4 or 5 years, this thing is going to have to consolidate for probably 3 to 6 months. So this thing's going to bounce around from 15 to 17 bucks, maybe 15 to 14 bucks if 14 holds. It's going to bounce around there. It's going to bounce around there. It's going to bounce around there and just bore you to death. And then all the volume's going to come out of it. And at that point, you're probably going to have a hell of a play on your hand. But it's going to take a while for this thing to go sideways before it's probably a good play. That's probably the worst part of it. Are you thinking of it just as a trade or maybe as a longer-term hold?
Longer-term hold.
You know, I think what you're looking at is right. I think the one thing that most people do that's wrong is that after a huge pullback like this, it actually tests the low. They think that the first time it tests the low is it. Normally you get consolidations that last for a while, and in this case you're testing a 4 or 5 year low. You're probably talking about at least 3 months, somewhere around that level, before the thing's probably going to really take off, if it holds. So you're probably going to get 1, 2, 3 bounces, and it's just going to drive you nuts. And then one day you're going to probably get in here and test that 1473 low with like 3 million shares one day, and then that's going to be the signal to buy it. So just have a, I think you've got a great chart here. I think it's just going to take an extreme amount of patience to hold this. But I'm going to put it on my watch list now.
Okay, I'll do that. And David, when you get a chance, whenever, would you be able to look at ITCI?
IDCI.
No, ITCI. India, Paul, Charlie, India.
India, Paul, China, India?
Yes. Intelli Pharmaceutical?
Yeah. So this thing, what are you looking at, back in the 145 range?
Yes. Actually, I was looking at like a 185, 188.
Yeah, I'm thinking this thing's got that gap out of here and that huge one-day pop out of this thing. Boy, this thing looks like a heartbeat. I'm glad they're in the pharmaceutical business out here, because, yeah, I see what you're looking at here, but boy, it's again, these things, these are great charts to watch, and you know, you're going to get that huge, super huge low test on like no volume and this kind, and that's going to be the key. If you heard me a little earlier, I was talking about CSIQ.
Okay. No, I haven't heard in the earlier.
Okay.
I just logged in.
No, that's fine. In CSIQ, if you go back and look at it, there's like a March low and a low from about 6 months or a year previous. And they were just, all the stocks were just getting crushed back there. But you saw the one low, and then you saw the next low. But the next low was on like 10% of the previous low. It tested like a, if I remember right, I was watching, because it was one of these stocks just like these that I was watching. And you knew, I had a handful of them in that March 2009 low. And they all were, the ones I picked were all testing the lows on about 10% of the previous volume down, of that previous swing down. And these are going to do the same thing. There's going to be one day when there's just going to be no volume, and this thing's going to be $1.50, $1.45, and it's going to be printing, you know, no volume. This one really doesn't have that much volume already. I'd be kind of tough to actually trade this one. I like the other one better.
Okay.
Okay, you have a great day.
You too, then, dude.
Hopefully you stay out of that snow up there. We will be back in a minute. We'll try to go through the rest of these stocks before the close of the show. You can give me a call, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I said, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And as we come back, wanted to take a quick look at Apple because we're going to look at Skyworks Solutions in a minute. But Apple's not looking that bad out here. You wanted a retest of this 435 January 25th low. It had 43 million shares. There's a gap back there that goes back, let's see how long this thing goes back. Goes back to the 25th of January in 2012 when this thing really took off, 34 million shares at 446 range out here. So we were basically looking at that level, at some level of support. We had that high volume down day on January 25th. Basically brought in 43 million shares. It's probably going to take a little while to chew through that. But we're not seeing any kind of signal out in Skyworks Solution, a major supplier for iPhone parts out here, taking a big header down today for us. So WKS. One of the things we want to bring up is you probably want to be looking at these endpoint companies. Last September 25th, I did a special report in the Tech Insider about how bad all these companies that were major suppliers for the iPhone 5 parts were starting to trade down well in advance of Apple starting to crack. I suspect that these will lead them up, but you're probably going to be looking for a movement in that. We do have a phone call, and it's Kevin from Marina Del Rey. How you doing today, Kevin?
Hey, Dave. How are you? It's freezing out here, but it's okay.
In California?
Yeah.
Well, I got the air conditioning turned up in here.
Oh, geez.
So
I like it, though. It's okay. That's why I moved out here.
Yeah. So anyway, what are you thinking on 3D here?
Yeah, no, I remember you talking about it a while back. So I was just wondering, how is this looking?
Well, I thought it was a bubble, and we actually shorted it in the newsletter at about 70 and changed and covered it at 58. It is going to split, and I had some incorrect information on its split date. I thought it was going to split last Friday, and it did not. And I can kick myself for it because we were short again at 66. And, this, it's got probably 48 range in it before it finds the first level of support. And it's been in such a bubble that I think it could come down into the low 30s.
Oh, wow. Okay, cool.
So I think you've got a lot of time in these things. Not a lot of volume out here today, but a lot of hysteria in this stock. I was hoping this thing would go to about $100 in about 2 years from now.
Yeah.
And it went to $72 in about 3 months. And unfortunately, it doesn't matter the company or how much they're going to earn. They've basically blown this stock up, and it's going to take a long time to repeat before it comes out. Now, what you do have in here is a great untested high out here at 41.98 with 4 million shares. So this thing is probably going to go back up and tag that one more time. So maybe a great tag out here. Great company. They build great products. Of course, anybody that gets into a business like this, once they say there's gold in them, there are hills, everybody and their dog's building a 3D printer now.
Yeah, right.
I think they've got the best portfolio of patents and the best product line across, but the market is just super bubbly. I don't know if you caught it, but we bought X1 in the newsletter for the IPO for the Tech Insider, and it was like $18 at the price. We sold out the first day in the 25s. I probably would have held it a little longer, but in these bubbles, it's very tough. They can move extremely quickly, but I think you got a lot of time on this one.
All right.
Are you shorting it or trying to buy long?
Right now, I'm just looking at it.
Okay, well, wait for it. It's going to be a while. You all have a great day and safe day. We'll see you tomorrow. Same bat channel, same bat time.